If you are truly invested in retaining your health insurance profitability, then you need to jump in. They are paying a full premium to a fully insured program, and that insurance company is making money on them.
Of course. All right, hey guys, I'm Spencer Smith here with a special episode of Self-Funded with Spencer on the road in San Antonio, Texas. And I'm here with
Kathy Lanier from VitalLink.
Kathy Lanier from VitalLink. What does VitalLink do?
We are an ambulance company.
An ambulance company, okay. So are you managing like a fleet of ambulances? Or when you say you're an ambulance company, what does that mean exactly?
Well, we provide pre-hospital care. So we are an emergency medical service. We do 911 calls and hospital-to-hospital transfers. And we have a side business where we do vehicle repair work.
Okay.
So we are...
Why? Because vehicles so often need repair, you might as well bring them in-house instead of paying somebody else to do it?
We take care of our own ambulances, and plus we have outside customers.
Well, you're kind of self-insured for your vehicle maintenance, then it sounds like a little
exactly.
bit. So where are you guys based? Where in the country?
Batesville, Arkansas.
Batesville, Arkansas.
We are northeast Arkansas. In rural Arkansas, we're in 3 counties in Arkansas, and we cover a large geographic area with somewhat low call volume. So we're not a huge company.
Oh, but you are, so low call volume, but you might have to make a 100-mile trek or a 50-mile trek. Okay,
exactly.
Well, I wish we had more time because I would really dig into the logistic challenges that happen there. But let's talk about medTRANS and health plan management and all those things. So you were telling me off camera, but I'd love to hear, you've been with medTRANS for 12 years, right?
Yes,
okay.
We have.
So you're an OG medTRANS captive member.
I am an OG.
Okay. But what was obviously I'm asking you to recall over a decade ago, but what was kind of your plan? What did it look like prior to being in a captive?
We were with a traditional BUCA. We were at their mercy when it came to renewals. Mm-hmm. We never knew if they were going to hit us with a reasonable increase or something astronomical.
Okay.
The renewal process was very stressful. We would have to shop it annually, which meant having our employees fill out multiple enrollment forms, and catching EMS providers on the fly is very difficult. So it was just problematic all the way around.
Well, did you feel like, it sounds like obviously you didn't know year to year what your renewal increase would be. I mean, were there some really big ones that you got?
There were some really big ones.
And then you don't know what to do to combat that, right? What are your choices?
Exactly.
Strip benefits, raise the cost of insurance, move carriers. I mean, there's not a lot of good options when that happens.
There are no good options.
So when did you get introduced, though? If you've been in the captive for 12 years, like how long was that sort of educational and courtship process?
I think Phil courted VitalLink for about 18 months. He came in advance of one renewal, and we weren't quite ready to jump in head first. And then the next renewal cycle, we got hit with yet another renewal. Yep. He and his partner at the time came back to Arkansas to visit, and we just said, yes, this is the way to go. That's
awesome. And now you told me something interesting off camera, but I want to hear a little bit about this story. Is you not only changed consultants, like brokers, when you went into the captive, but you basically went without one for a while. So what was it like changing and then going without a consultant and going into medTRANS? Because that's a weird transition, I have to say.
It is a weird transition. So before medTRANS, we had a local insurance agent who simply sold us a health plan.
Okay.
And so off the side, I was constantly researching other options, and Phil brought us in. And actually, the current TPA at the time did the legwork and the enrollment process, but we just didn't have a broker or a consultant in our court. And then at some point later, Epic kind of just swept us in.
But so it's like you were able to make that transition, which is, not a uncomplicated transition, not necessarily to say that Phil and his team doesn't simplify it, right? But there's just moving parts, right? And if you don't have a consultant that is experienced in it, that's a little bit like I'd be a little bit like hesitant, right? Or worried about it. But did he make it easy for you guys to be able to do that?
He absolutely made it easy. One of the biggest things for us was we didn't want health insurance to look different for our employees. We wanted to make sure it still worked like they were used to insurance working. And so that was really the biggest thing that made us take pause before we finally jumped in. But then they rolled out insurance cards and they looked normal. And our local providers paused and said, wait a minute, we don't recognize this. And we just had to educate our employees and say, right, it's new, it's different, it's cutting edge. Yeah. But we're going to roll with it.
Well, but it's cutting edge, but I presume over the last 12 years, you've probably had a pretty darn good experience in controlling costs and all those things. So give me some of the highlights, right? Okay. What have you been able to do for your population?
So from the front end, when we were rolling this out, and we said this is going to look very, very different, but I'm going to make you all a promise. I looked at my employees and I said, I am going to reduce your out-of-pocket cost for health insurance. We've been required to pass on increases to you, and we're going to stay the same right now, and I'm going to reduce them. And it took a few years. We rolled out a wellness program, so we got them committed to their own personal health and well-being. And over the years, we saw actual changes happen. And we saw our claims experience go down. And so therefore, if we were having a good run of claims experience, we would announce a premium vacation.
Premium vacation or holiday, I've heard it called before,
Yes, and so we would not take their health insurance premiums out of their check for an entire month. And then as 3 or 4 renewals went by, I go, okay, guys, we're not going to raise your premiums this year.
Wow, yeah.
Okay, and the next year I said, we're going to take a step back. We're reducing your premiums.
But I presume benefits were still...
Benefits were staying the same, if not going up.
Yeah.
Yes. So as it stands today, we have a robust wellness program in place, which allows the employee to earn credits towards their health insurance premium.
Okay.
So there is a cost to an employee-only premium or monthly cost to their health insurance, but if they fully participate in the wellness program, they can get their monthly premium to zero.
To zero?
To zero.
Wow, okay.
Yes.
That's something, obviously, when we speak to some of the controls that you get, right? Like this, the ability to be flexible and even come up with these creative ideas with the idea, right, my membership, my population of people I want to take care of and give them the benefit and maybe, hey, attract new talent into our organization because they talk to their neighbor and they touted how awesome Vital Link's benefits are, and now all of a sudden you have this retention and attraction mechanism to get people in. I mean, like the sky's kind of the limit,
It
right?
really is.
But have you had an experience? Did you have a bad claims year? Surely in the last 12 years.
Our very first year was a really bad claims year.
Did that scare you and go, oh my God, what did we do? Or were you comfortable knowing that you were protected?
I was actually really comforted.
Good.
Phil and his crew just helped me, held my hand through the process. And the first renewal after that bad claims year, it really solidified my decision because we didn't get hit with a crazy increase because one of them was an isolated incident and one of them was a cancer that was in remission. So neither one was a skies falling situation, some sort of long-term chronic illness. So we just had a somewhat normal renewal. And we went on, business as usual. And we've had good years and we've had bad years. Well,
I would presume at 12 years, I mean, it sounds like this is kind of, it's not broke, don't fix it. So we're probably going to stick with this mechanism for the foreseeable future.
We are in it for the long haul.
Well, I guess you're on the board right now. I mean, you're kind of obligated, even if you weren't wanting to. But so why don't you, closing thoughts for me, talk about if I was another employer listening to this and I'm a little bit tentative, but I've kind of heard about this captive thing over here. What would you say to them to help them understand why they might want to do this?
I would say to them, if you are truly invested in retaining your health insurance profitability, then you need to jump in.
Okay.
I would remind them that they are paying the full premium to a fully insured program, and that insurance company is making money on them.
Of course.
And if they, as a business leader, owner, president, CEO, want to bring those profits back in-house, they need to seriously consider this.
That's wonderfully said, and I couldn't say it better myself. So thank you for joining me on the little mini episode. I hope you enjoyed it. Was it your first podcast?
It was my first podcast.
Good. We did it. Awesome. So thanks again for your time, and maybe we'll do this next year.
Okay, sounds great.
Thanks.